Hi everyone and welcome back. Today I want to start a little bit different. I want to show you a stock I'm covering for almost a year now, and I couldn't find any analysis on it, especially no Elliott Wave counts or analysts who covered this one here. We're talking about UTI Patterson. You find it under the ticker PTEN, PTEN in the NASDAQ. And yeah, UTI Patterson is an US oil field services firm that provides drilling rigs and completion services to energy producers. And therefore they are strongly tied to energy prices, drilling demand, politics and regulations in the oil and natural gas sector. And of course they are tied to the weather as well. Why the weather? Because when in the winter when it's getting colder, especially in the north of America and Europe, the people heating up their rooms. And what do they need? They need oil and gas, so energy. And with the increase or the increase of oil and natural gas demand, the demand of drilling services increases as well. Okay, this is from the fundamental point of view, and yeah, what else we have? We have the market cap here at $3 billion US. Then we have a price to sales ratio of 0.67. Everything below 1 can be considered as cheap, and everything above 1 would be considered as expensive. Therefore, from the fundamental metrics, we have the price to sales ratio currently at 0.67. But anyway, I just want to talk about the Elliott waves here. And one important thing here maybe, they paying a dividend last year of 8 cents per share and raised it now by 25% to 10 cents per share. And they're paying it quarterly. All right. The chart history starts here in November in 1993, and I'm counting this move here as 1, 2, 3, 4, 5 in wave 1 or A. Then we got an A wave, B wave, C wave, and probably bottomed here in a larger wave 2 or B. We can measure that again with our Fibonacci retracement tool here, and we want the price of the length of A or 1 to stay. We want wave 2 here above the 0.786 FIB level. And we have slightly broke below, but I don't consider this one here, this shadow, as a significant move or break below the 0.786 FIB retracement level. Therefore, that's a valid wave 2 or B for me. All right. And afterwards, we got 5 waves up. 1, 2, 3, 4, 5 in wave A or 1. And therefore, we're expecting 3 waves to the downside in a larger B or 2. And now is the question, did we already bottom? Or can we get one more low in the current wave count? And I have counted this one here as A, B, C in a larger wave A, in an orange B, and then 1, 2, 3. And the question is, did we already saw the wave 4 here? That would mean we have the 5th wave here, and we have completed the move, and we're running now up. Or, as you can see it right now, can we expect one more low in the 5th wave to the downside, which could bring us to the 61.8% FIB level. Yes, and let's jump into the micro counts on the 4-hour chart. And I will measure now the length from 2 to the end of 3, so the length of the third wave, potential third wave here. And we want to stay below the 61.8 Fibonacci retracement level for a valid wave 4. All right. So standard resistance is the 38 to 50%. And if we would break above the $9 level here, then we cannot count it as a valid wave 4, but this price is still trading below this level, and therefore we could actually expect some kind of or we could still expect a fifth waves to the downside. Because the wave 4 is pretty high here, I mean, we don't need to go that deep in the fifth wave if we get it. But let's jump into the micro count from the bottom here. I see this move here from the bottom, as you can see here, that was a low, as A, B, C. So it's a three-wave structure. In a more corrective way, or the bearish outcome with one more low, I would consider this move here in a more complex way, in a W. WXY structures are more complex because we have in the subwaves three-wave structures. That would mean here the A, B, C. Then the X wave needs to be a three-wave structure as well in A, B, C. Here it's getting clearer, A, B, C. And therefore we need in the Y wave an A, B, C as well. A, B, C in the Y wave. But that would require now that we're crushing down 1, 2, 3, 4, 5 in the fifth wave. Our confirmation that we crushing down would, for me, the break below when we measure here the let's go to this wave 2, the break of $6.42. Why? Because when we count this move here as a 1, 2 in a diagonal, then I see this move, yeah, same way, A, B, C, but in a larger wave 1, then A, B, C in wave 2. And now we saw the third wave to the upside in an A, B, C in a diagonal. All subwaves are in three waves. And now we should see a pullback in an A, B, C in wave 4, but then we should hold ideally above the $6.42. And from there, we should get an A, B, C in the fifth wave again. And that would fulfill the requirements for a larger wave 1. And then we can expect three waves to the downside. And that could be a pretty interesting entry point in a wave 2. And then we could trade the third wave to the upside. This from a bullish point of view. So long story short, as long as we're trading below the $9, we can expect a fifth wave to the downside. Our confirmation that we're coming down in a fifth wave would be the break of the $6.42. Can we hold this level? We can still expect some kind of an A, B, C in the fifth wave. Then we have fulfilled the requirements for a five-wave structure to the upside, which can consider it as a wave 1 to the upside. By breaking this level of $9, we have the bottoming signal because we got 5 waves to the upside through the $9 level. And then we would look for 3 waves down afterwards in wave 2. This could be an entry point, and then we're trading the third wave to the upside. All right. I hope that was interesting for you. And if you want to get more of these stocks who never got covered here on YouTube, then also check out our memberships down below. I'm covering many stocks, and I'm completely transparent with my own trades there. We have currently 90 days for free with the code free90. And yeah, check it out, the WAP link below. And otherwise, see you next time. Bye bye.